Get excited. We got a lot to talk about actually, because again, as we look across the board, we look at the futures this morning, paying very close attention to the fact that, well, we're green again. Gold's back above 4,000, which obviously I'm very excited about. Silver back above 48, palladium, platinum, all the metals continuing to climb. This morning, we got some news from the Fed. Mr. Waller speaking on CNBC. I'm not sure what he was talking about, but we will discuss that momentarily. We'll go through morning momentum. We'll talk about the runner, and we'll talk about what's going on next week. Very busy week. Remember, CPI was supposed to come out next week. They are going to be calling the economists back to finish the report. And then we're going to have that report at the end of the month, right around the time that the Federal Reserve will meet. Very important. All right, why are you joining us? As always, 9:30 in the morning. Well, that's when you become exit liquidity. We had some companies reporting earnings this morning. A little bit of chatter, a little bit of noise. But that said, some of the companies that fell today, like Levi's, a pretty good signal on what not to do when you are reporting earnings. And that is warn about economic weakness in the consumer market. Not good. Got to use the APC battery backup surge protection. Well, okay. Are you selling backup security protection right now? It's a new house. So we'll figure it out. I have a surge protector, just not on that computer yet. We will take care of it. All right. As always, we'll talk about where the smart money is positioning. Top screens, top stocks, top traders. Got a new screen that I'm using, so we're looking for some breakout names as well that we will be testing. And of course, what are the stocks worth trading today? Cubs are alive, I guess, I hope, maybe. I actually didn't finish watching the game last night, so I assume good things happened. They did 6-0. Okay. And the Phillies threw the ball through the uprights and walked off the field. Very bad play to end that game. Momentum, -11. So the number of stocks breaking out versus breaking down, not looking good. And this goes back to some of the bigger questions we have about what's going to happen with the Federal Reserve, the trepidation around what's occurring with, of course, France and Japan, and this. Again, this is a reminder that when we get into these environments where all anyone is doing is talking about how weak the US dollar is and how everyone is betting against the US dollar, holy cow, is that a contrarian signal to go long the US dollar? The UUP is now above where it was in August. This is the dollar bullish fund popping again, moving up to 28. This is the highest levels we have seen since May. And as we know, when the dollar is stronger, that can impact equities as well. But we're seeing this against the Japanese yen. We're seeing about against the euro dollar looking a little bit stronger. On the sector side, we are weak on the consumer cyclicals, consumer defensives, consumer services, financials, and real estate. And we are seeing some challenges, of course, in the tech sector, particularly on names like Zebra, ZBRA, Zebra Technologies, not good. Looking for continued weakness in that communication equipment space. -11, what do we do with that? We turn around and see where the money is leaving from. At the moment, it is not coming from the top of the S&P 500. The FNGD is still under its 20-day moving average, but it is a reminder that we have to keep an eye on breadth. And once again, the number of stocks under their 50-day moving average continuing to rise. We were at 45 recently. Stocks hitting new highs accelerating again. Just a number of stocks. How many stocks are actually leading the advance? Strong in pre-market. But just keep an eye on this during the day. If this number of stocks that are under their 50-day moving average continues to rise, as the stock market continues to rise, it is a signal, once again, that the mega caps and just a handful of names are actually driving those moves. On the global front, Mark is just selling APCs off the back of his truck, apparently. So if we have to pivot, Don, we will just move into surge protection sales. That is the cleanest thing to do in this environment. Focusing on the GLD, SLV, PPLT, Newmont Mining, gold and Royal Gold. Once again, gold back above 4,000. And again, unusual safe haven behavior a little bit, given the fact that the US dollar is moving higher. I don't know why it's doing that, but let's just, come on, get it together. All right. The US dollar moving higher while gold moving higher. Yeah, that is not something that we would necessarily anticipate. However, just keep in mind that the central banks around the globe continue to be under stress and China continuing to pump. This is driven obviously by inflation concerns, the previous US dollar weakness, and the central bank buying. So once again, keep a close eye on this. The test, again, we had that article in the Wall Street Journal saying that the gold being at 4,000 effectively points to concerns around the faith in central banks. Uh-huh. Yeah, you're a year late on that one, Wall Street Journal. Can gold hold above 4,000? That'll be the key line. Looking for a little bit of a range somewhere between that 39.50 and that 4,100. Good opportunity to play some catch up on some of these mining names. And again, momentum in names like NEM continuing to be very, very strong. Holding above that 8-day for the last a couple of weeks until yesterday. Look to see if we get a retest off that 20-day moving average. And if we do, that will become an opportunity to go long again, assuming the continued weakness in global flows. ETF and fund flows continue to remain moving strong in metals. We will be seeing how much the ETFs play catch up as the amount of capital has continued to flow into these ETFs. And the real big question is the miners versus the spot price. Miners are doing very, very well, very strong margins, and one of the top performers of the year on the GDX and especially the GDXU. Meanwhile, Governor Barr has warned about cuts. We had some chatter this morning. Yeah, I don't even know what that CNBC interview was about with Waller. It made no sense to me because once again they continue to debate debate whether or not the Fed will cut rates. But again, the focus is on too much on the Fed funds rate, which is largely obsolete. Traders are paying attention to the secured overnight financing rate, which is called SOFR, and repo rates and the Treasury bill yields instead of the Fed funds rate, because they actually reflect the real cost of money in the US economy. The Fed funds rate is more of a communication tool. It's basically just a signal to the market. Hey, why don't we cut this and that'll be beneficial? Like, it doesn't matter. And journalists keep asking about the Fed funds rate as if it were like 2006. Monetary policy runs through reserve levels, repo operations, and the Treasury markets liquidity. And the key thing is, it's just another sign of a conspiracy of CNBC against its audience because they continually misname things, have misnomers, and they're just not actually explaining how the financial system actually works. If you need a good example of that, look to the PPI index. That's the producer price index. They have been calling the producer price index wholesale prices for as long as I have been alive. And I have been alive shorter than when wholesale prices actually were wholesale prices. That changed in 1978, and it used to be called the Wholesale Price Index. It's not the wholesale prices. They changed it because the price of gas down in the Pad 3 down in Louisiana is a global price. It's not a producer price. And the price of chemicals in Europe compared to what the cost of a sweater is up in Washington State, they're not related. So producer price index is a U.S. focused. I don't even know why I'm going on this rant. And neither does Don or anybody else. Okay, so pay attention to the TLT, ZB Futures, SPY, Qs, XLF on the financials. We're cautioning against aggressive cuts despite the balanced labor market. Core PCE probably going to remain over 3%. Isn't that great? Aren't they doing a great job? It's just a reminder, once again, that they're flying blind, that all of the capital that continues to be released into the system, all of the short-term treasury bills, that is helping to stoke inflation. Services inflation remains high. Headline inflation now not going to hit until 2% until 2027. Remember, in 2021, they said that we would not hit 2% until 2025. So they're 4 years late, and now you're getting another 2 years. We're probably not going to hit inflation until there is a more bigger drawdown in the equity markets, largely because wealthier spending is the underlying the linchpin of the economy at this moment. Market reactions will be in bonds, the yield curve steepening or flattening. Pay close attention to that. Techs and REITs are very vulnerable, and financials may benefit from rate changes. And we'll get that CPI data later this month. Finally, look, AI is driving everything. We know that. It's really the capex that is so significant. There have been comparisons to 1999 because the capex spending was very similar in the internet boom, and during that period of kind of outlining and explaining what the kind of pre-rollout will look like. AI doesn't require as long of a term of rollout as the internet did. Remember, the internet became a huge thing in the 1990s. However, the T1 and the infrastructure and the high speed, it took 20 years. AI doesn't need that long. AI needs about 18 more months. So the question is, are we in a capex bubble, or is this going to be a continuation of capex spending? But NVIDIA continuing to drive everything. The Financial Stability Board and the BIS and everybody else who is worried about the ongoing state of affairs are issuing risk analysis around the idea that we are overvalued. Again, valuations aren't really my core concern. Price to earnings is extraordinarily antiquated. Instead, I'm looking at price to domestic liquidity, and the U.S. equity markets are where all the money is flowing internationally. Once again, we were 33% of the global stock market back in around 2013. We're more than 70% today. Our policies and the way that we continue to dominate on risk taking, we remain the alpha dog in the equity markets, and therefore our rates and our overall continued focus on valuations, I think, is just misguided. Really, at the end of the day, you got to follow the technicals, and when the technicals start to crack, that's where you get out of the way. And as always, we're focused on the 8, 20, and 50-day exponential moving averages on the S&P 500, the Nasdaq, the Russell 2000, and of course, those inverse ETFs that we watch. Keep a very close eye on model concentration, herding risk. Okay, all these things that are warned about, they have been warned about forever. They are just getting into the headlines because, once again, regulators are raising their hands and saying, hey, remember, these things remain a problem. These are kind of the black swan type of things where you have a major cyber event or something significant takes a project offline. We know those risks exist, but the question really is whether or not AI is going to meet significant regulatory pushback, especially in Europe, because that has been the place where Europe has regulated Facebook, it has regulated all of the other major US tech companies, and has effectively put the brakes on some of their expansion plans. Watch the regulatory announcements. I'm not expecting much regulatory overreach here in the United States under the Trump administration. The EU is always the wild card, and of course China, which is now putting more pressure on NVIDIA as they are trying to stop any black market NVIDIA chips from making it into the country. We'll see if that changes any sentiment shift in companies like NVIDIA and Palantir. Watch the 20-day EMAs of those stocks to pay very close attention to outflows. Also watch the relative strength index, the money flow index, and some of the other indicators that we track simply to get a good sense of where price and volume are operating at all times. And once again, you're going to probably see at some point, it might not come now, but it will come as we get deeper into the liquidity cycle, the rotation out of those higher beta stocks and movement toward companies that are more defensive or utilities that will pay strong yields. It's 9:01. Don surge is protective. That's good. That's what matters. Palladium continues to move. Do runna. We need Secret Agent Charlie's voice for that, obviously. All right, we got a couple of names here, and DBD, Diebold Nixdorf, There we go. Popping above the 8 and the 20-day EMA right now, looking for that that 20 to play some catch up. 58.69. And as I look at, again, this is what happens when you're relegated back to the laptop. I apologize. As far as an option chain goes, this is obviously not very great for trying to trade options, but I do just like the buying the stock, and I like the fact that this continues to maintain that upward momentum. We've had moves. 54 took us up to about 63, so upside here potentially in the mid 60s. Just buying a couple of shares, seeing if the momentum holds, and keeping a very tight stop right back here at that $58 level. Yep, 1%. That's all I'm willing to risk on the DBD. VICR and VFF, Village Farms coming out of nowhere this morning. Again, this is one of those things that we talk about. Do not forget that when we move into an environment where we're concerned about inflation, food, everybody starts buying the food. It keeps happening. So we just had another bounce off that 20-day EMA, that green line. We've moved up to 370. The strength is here. What I'm looking for is another move back, potentially back here to that 335 line. But all of those companies in that space, I mean, even like the VEGLA, which is a Village Supermarket, this thing got crushed in recent days. I'm looking for this to get into oversold territory, and then I am going to buy it because food is not going away. We saw the same thing with Fresh Del Monte produce, right? Fresh Del Monte produce is now breaking down a little bit. I want you to keep a close eye on these stocks because at some point you're going to get very high F score, low gram score, and a very strong Z score. You're going to get that 8-day providing support, and we're going to look for another breakout. So we're going to look for another push back to 37, 38 relatively soon. Some of these defensive stocks are just getting beaten up because of that rotation into the AI names. We are looking for rotation back into these names. Add VFF, FDP, and VLGEA to your watch lists and look for continued strength here out of Village Farms. Finally, Vicer. This was an interesting one. Vicor Corporation. Same thing, looking for a push back to 55. They're going to report earnings on the 21st. Just trade to earnings, not through it. And once again, as we look at the option chain here, it's going to be a little stagnant. Not a whole lot here, but if we did go into that October 17th period, that 55 is a little elevated at around 80 cents. A little too much risk for me, but I would look to see if we get any volume on that 55 or $50 call, and that would be buying the 50 and selling the 55. We'll pay attention to that when the market opens later this morning. VLO, PBF, all the refineries are under stress at the moment. VLO breaking down a little bit. I like to trade these names between the 50 and the 20. So VLO, this is a pretty liquid chain, by the way. If we look at VLO and go out into the 17th or the 24th, what we're going to be looking specifically at is around that 162.50 level, buying the 162.50 put and selling the 157.50 put. So back probably out to next Friday, the October 17th, buying the 162.50, selling the 157.50. And again, this provides you with a little bit of a cushion just in case we do get a little bit of a rebound back to those key moving averages. PBR is a little bit different. Forgive me, PBR. PBF. Carlos Slim, not getting it done. Same thing though, $29, $30 put. Looking for a retest down here at that 50-day moving average on PBF. Again, refineries under some pressure due to energy prices. And finally, Roku. I forgot that this is a company. Why is this a company? How is this a public company? I don't even understand what they do. Looking for a move back to 95. Same thing, right? Buy the 100, sell them 55, look for a relatively short-term move. If you set a stop at around 10%, 15%, you're just looking for a move back here. So continued weakness here on Roku. Looks like that 8's going to cross that 20, and we could see continued weakness. This thing could get back down to 80 pretty quickly. Watch list names. Stocks that are starting to move a little bit more. I don't even know how to pronounce this. Abiona? Sure, why not? Buying this, 569, stop at 560, and looking for a move back to 6. Not bad. 8, 9% move. ABEO. And then here comes some of the tech names and some of the earnings names. Netflix is back again. Oh, man, this thing just keeps doing what it does, chopping around left and right. NFLX, same thing here, right? Keeping a tight stop, looking for a move back to maybe that 26 or that 1265, 1275 level. Uh, got like 900 options chains on this one. Um, it's expensive to trade this. It's very expensive to trade this. But again, for 1225, 1225 was trading at 24 bucks. And the 1260 was at around 10 yesterday. So that's going to be a $1,200 trade. Um, if you're going to trade at 1225 and probably up to the 1250 level, maybe even the 1240 level, because that's going to set a spread of around 800, looking for continuation and strength. UAL, which is United Airlines Holdings, they're going to fly to Croatia, Scotland, Italy, and Spain. I don't know who's going to be on those planes, but hey, it's going to be great. It's going to be fun. Delta is in positive momentum breakout territory, and the airline stocks likely to follow. Do not trade and hold through earnings. Obviously, trade up to earnings, but with the strength in the UAL, and you can see continued momentum. Focus here on the UAL, pushing back above the 54 level, 50 on the MFI, crossover positive here on the ADX, and looking to turn on that MACD. That's what we're looking for, right? Improvement in that histogram. Relatively short duration, 100 to the 105 is not the worst idea in the world. Keeping a tight stop and keeping your stops aligned back at probably that $100 level, given the fact that the 20 days should catch up there. Zoom is waking up. Another one of these names, another one of these tech names that sells off, gets beaten up in the middle of a tech crunch, and then rebounds. So a nice move back yesterday from that $80 level up to the 82.50 level. Looking for a short-term move, not a huge move, could be just $2, $3, $4. But if you stay high probability, I mean, just something as simple as buying the 80 and selling the 82. I know that that sounds kind of crazy, but what happens is you end up in an environment where you have a high probability of success and you have a very tight stop. So we'll talk about how to make some of those trades today. More bullish call spreads, but with very high probabilities that are traded around these key moving averages. We'll dig into that later today as well. And that's it. 9:10. Look at how fast the time goes, everybody. Look at that. That's amazing. I'm amazed. All right. What was my comment on gold? Bullish. Yeah, I know. Roku just still makes no sense to me. Um, bullish. All signs continue to look toward all of these more monetary policy, more monetary expansion in the future. Doji, good morning. Hope we're doing well. GLP-1 says food is going away. You've changed my mind, Don. You've changed my mind. Yikes. We don't need food. We can just take vitamins and drink beer. That was actually something. Okay, hold up. You don't need food. You just need Bud Light and vitamins. The person who said that is now a very high ranking executive at ITW and my fraternity father. What's that, pledge dad? Yeah, something like that. Yeah, that explains a lot, doesn't it? The world is run by fascinating people. UAMY continuing to be very, very strong. We've talked a little bit about this when it comes to insider buying. And yeah, we're going to do the insider thing this morning because UAMY has added another 10%. All right, real quick, let's just have a pretty simple explanation on what we're going to be looking for over the next 6 weeks. Okay. So the thing that you have to pay very close attention to, and I wrote about this last week, is the fact that we have these supply chain issues happening right now in the United States. And the key thing is, if you listen to what's going on between the United States and China, is the fact that China is, in all negotiations, going to continue to say, if you want rare earths, you need to do X for us. China sits on the overwhelming bulk of rare earth materials. I will remind you that I don't know if it's necessarily confirmed, but I bet it's happening. After we left Afghanistan, China just went in and said, hey, we'll mine all that stuff up in the hills for you. Massive troves of rare earth materials up in those mountains. So here in the United States, we do not have, the level of rare earth materials as places like China. We might have some things up in places like Wyoming, which are completely and totally impossible to get to, but I digress, right? There are certain places around the country where we do have rare earth metals. However, we have a very active legal system here of environmental groups that will sue in order to ensure the protection of rare buckwheats. And that was one of the things that was happening out in Nevada. So you're seeing these deals that are being done, things like USAR, things like UAMY, the United States stepping in. If there are strategic chokeholds on any of these rare earth materials, and there's only a handful of places that have them, well, what we're seeing is big insider deals that are being done around policy. And even though UAMY, which had already rallied and had a heck of a move when all of the insiders were buying it at 50 cents on the dollar or 50 cents, the CEO of the company back in late September bought $613,000 in shares. That's bullish. It's bullish when they're buying at all-time highs because now all of a sudden UAMY has doubled since then and the momentum remains strong. Todd's here.
Hey Garrett, how you doing this morning?
I'm great. What's going on?
Still celebrating the Cubs victory last night. Sorry.
Good for you.
Uh,
I unfortunately missed Hap's home run because I was watching the Dodgers game, and that was the only game they were playing, so they wouldn't cut over on any of the channels.
and that's the main reason I'm in this morning is just to celebrate the Cubs victory.
That's fair.
Just kidding. I'm here just to show a little bit of what. I'm Todd Sweet, by the way. I've been here. I'm Don's personal clerk. I think I like to consider myself. And I was just going to show us up a few things around the TheoTrade website,
Yep.
especially for all the new clients that we've had come in recently. And so I want to forgive me again for a little hoarse voice. I almost went down to Wrigleyville last night. I almost had tickets. I know you've been to many games. I know yesterday you mentioned the World Series
Yep.
back in the day. Um,
Back in
I
the
was
day.
I used to live down the road on Addison, and I went to the game that Moises Alou hit a home run back before, it was around 2006.
Yep.
And he hit one in the streets of Waveland where I was with along like thousands of other people. And that's before the Ricketts took over. But that being said, I don't mean to digress.
No, you're
Um,
good.
I know we're all about the market nowadays. Uh, if you want to give it to me, I'll just share what I know about TheoTrade, and we can hopefully everyone has a
You should
great
be you
Friday.
should you should be able to share right now. You should be able to click it and
You
you
got it. I got it right now.
Cool. All right. Well, I'm going to sign off right now, let you take care of it. And I hope you have a great day, Todd. Everybody else, I will see you later today at 3 o'clock. Have a great day, everybody.
All right, Gary, be good.
You too.
Hey, everybody. My name's Todd Sweets. If you're not familiar with me, I'm Todd. Been at TheoTrade a few years, and I'm here to just give you a quick little walk around on TheoTrade.